Hey guys, Mark with Think Insurance, and today we're going to talk about a very popular topic which has been on my channel this is the fourth time we've discussed this. It seems to be a popular keyword, and it's some news that just came out versus Lemonade Insurance. So Lemonade Insurance has been extremely popular. They came out just under 5 years ago, 4.5 years ago, as the tech version of insurance. They essentially came out and their promotion was that they're going to donate the excess money to a fund that you choose. And so it's kind of a give back versus your typical insurance company, which profits and then they make more money, and it's kind of just them keeping the funds. You don't keep them, so you're still paying the same that you're paying through Lemonade, but it goes to a good cause. Now, their prices are usually cheaper. The only thing is they only sell a few products. So they only sell renters, homeowners insurance, and they've recently got into life insurance and I believe health, but then pet insurance as well. And those are playing some pretty big factors in these numbers that we're going to read. I've actually got some cheat sheets here because there's a lot of data that I just spent several hours reading through, and we're going to talk about their Q4 earnings and why they're going up in flames, but also why I might invest in them. Let me start by just saying I don't hate Lemonade by any means. I actually think they've got a good concept. I think they're going the wrong way about a lot of things, and we're going to talk about those and the reasons that I don't necessarily trust them long-term as a company yet. They could change my mind in the future, you just never know. But there's a lot of things that I've seen in my 10 plus year in the industry of insurance, and I have a really good understanding of what the typical market has been with different products, introducing new products and programs and all sorts of things. There's usually a lot of hurdles that you have to overcome. And if you don't take those first steps correctly, you're gonna have or usually fail at it. And I think there's a few things that they're gonna stumble through. We're going to reference some of my previous video, which actually shows some of the stuff, the concerns that I had then that are actually showing to be true today. And I'm going to keep going with that because I've got a really good understanding of what I think is going to happen. So we're going to start with the Vice President of Communications. His name is Yale Wisner-Levy. And they said in this last quarter, they had about an 87% growth. That's amazing, like that's unheard of. However, if you read through a lot of the questions as you keep going, you'll find that somebody asked the question about the previous quarters because they only grew about 20% quarter over quarter, and then all of a sudden in the last quarter of 2020, they had a huge growth. So that 87% is the previous quarter, not the whole year. So essentially they went from 213 million, so 20% of that was normal growth, 40% of that was the fourth quarter alone, and 2/3 of that was their new products. So what they've started to do and they're implementing is in the previous video, which I'll actually link that below as well, is we talked about that they were adding pet insurance and that they had all these new products that they were coming out with, and they were trying to grow that part of the book. And my biggest concern was, why are they adding that now? I think it's too early when they're only 5 years or younger. At the time, they're about 3.5 years old. And so now they're adding new products. Well, in my opinion, it's kind of a scheme that I've seen companies do time over time. When you have a department that needs to produce and they need to show good positive numbers, which Lemonade definitely does being a newer company to the industry, they need to show positive numbers for people that are investing in them. And the only way to do that when you're losing money, because they are losing money each customer that they gain, they're improving it, which we'll talk about again, but they are losing money overall. And so in order to bump that up and make it look better is they're adding products. This is my personal opinion. I am not a finance expert or anything. I'm just a guy on the internet telling you my advice. I am very knowledgeable in the insurance industry and semi-knowledgeable in some of the investing points. That essentially means I'm probably good at losing money. But they go on to say that in the last 4 to 5 years, they've had about 1 million new customers. And what they're doing is they're introducing these new products. So they're essentially trying to put in a kind of a scheme where it's showing profit and it's showing growth, but it's really just an additional product. And the fear that I have is that there's a risk that comes with the product. Sure, they went up 87%, but if you do the math, you take their loss ratio based on the new customers, they're just creating this snowball of claims, this huge snowball that when they stop at the end of their point where they can't add more products, this huge negative is going to overcome into their system. Now, they're not trying to do that on purpose, but it's the only way to grow and show profit, because this industry is tough. If you don't get those numbers down to the penny, you're losing millions of dollars, and they can't afford that. They need their investors to stay committed, and so they're growing this kind of a negative in the background, and they're talking all of the positive here. Well, if they don't do it correctly, it's just going to overpower within a few more years, probably 5 years from now. You may not even see Lemonade as an option, or it might be sold off to another company. One thing that kind of bothered me was just a phrase that they said is during the actual recording, they talked about they've done in 5 years what took USAA, who currently and last year was listed as the top company for insurance. So they're saying that USAA took them 47 years to do as far as getting customers and acquisitions. There's a big difference between slowly growing and profit versus just one big bundle and everybody joins on. And if it's not a good fit, it's a bubble. It's going to pop. I got to be careful because I don't want to say that they're a bad company. It's just there's a lot of things to be careful with when you're looking at a company like this. So something that I like that they're doing is their cost per customer has gone up, like the amount that they charge the premium for has gone up about 20%. That's smart. That's something that I actually claimed that they were going to start doing because they can't just keep going at the low dollar. It's something that it's kind of a piece that State Farm has done in the past where they'll go into a market, and because they can afford the losses there, they're going to take the cheapest price. And then over time, they're going to slowly creep that price up so that it gets to be the level that they need to be at. What will happen is they're trying to gain the trust of a customer so that that long-term piece, they're going to want to stay with you as you take care of those people. You're essentially trying to buy in at the low amount, prove that you're great. If they love you enough to stay, then that's awesome. So here's the part that a lot of people are afraid of. So they talked about Q4. We're in Q1 of 2021. There's a small issue. There was a major claim in Texas. Guess what? 25% of all of Lemonade's business is in Texas. They're homeowners and they're renters. And there's a ton of home claims and a ton of claims. They've had over 1,000 people file claims through Lemonade already. And that's going to crush their loss ratio. They talk about that they have something called reinsurance. Essentially what reinsurance is an insurance company getting insurance from a larger insurance company. There's a small gap or small problem to that is there's 3 types of reinsurance. We're not going to go into that in this video. I am going to actually probably make a video on that. So if you guys want to learn more about the actual coverages of those pieces, hit the subscribe below. Don't forget to turn that bell icon on so you don't miss that part. The type of reinsurance that they're on a plan, they just revamped it in July of 2020. So they're actually on a new version. If you've seen any past pieces from them from pre-July, then ignore that piece because they've revamped the reinsurance contract with whoever they're with. I thought they were with Liberty Mutual. Don't quote me on that. I haven't researched that part. The type of reinsurance they have is a percentage base. We don't know which percentage they are on this loan or on this insurance piece. So essentially what happens is when there's a cat loss or catastrophic claim, which is what Texas is, it's what they call a black sheep event. Essentially, it's a rarity that you just can't calculate. Insurances just don't realize that weather can explode and there's no way to know that. So this has happened twice to them now. It happened last year and it's happening again. This is what's hurting them the most. They weren't prepared for that, and nobody should be. The amount that they're on the hook for this isn't as big as it sounds because they have that insurance company that's going to back that up. Something that I wish that somebody would have asked in those questions is what percentage of reinsurance do you have? So it's not a flat reinsurance where they say, well, we're going to cover the first 5 million and then the insurance company will cover everything above that. With the contract that Lemonade has is a percentage. So we're going to cover X percent and you're going to cover X percent. It's hard to assume what percentage they have. Even if it was a 50-50, that puts Lemonade in a huge loss ratio for Q1. They don't think that it's going to affect the overall year, and I can tell you why right now. So even though that Lemonade has gone up in the cost per policy, they've gone down in their marketing, and I think I know the strategic plan to this. They're announcing a new product. Whoa, wait a second. Mark, didn't you just say in the last video a year ago and about 6 months ago, you talked about how you thought they were just introducing products just to make the money look better and the profit all like that? But then you said you don't know for sure. Well, guess what? They're announcing a new product. We kind of know what this is going to be. I am 90% sure what they're going to come out and tell us, which is going to make people go nuts and think that this is the best value in the world, is they're going to come out with likely an auto policy. Now they're going to have home, renters, auto, pet, life. And how do I know that? I'm going to pull a quote here that was actually in this meeting. So this is the quote that came from Daniel Schreiber, which is the chief executive officer and the co-founder. We continue to evolve. So the part of the theme of today's announcements and core has been about how we've really moved from being monoline to multi-line. They're talking about adding the pet and the renters and all that. And that begins to morph into the messages about the company from offering a product to offering insurance more broadly. So rather than say insurance for renters or insurance for homeowners, we're getting tantalizingly close to a point to where we can just talk about whatever your insurance needs are. We're going to address them. So he's saying that doesn't matter what type of insurance you want. You want life, you want home, you want pet, you want auto insurance. We're just getting to a point where you just say, I need insurance, we're going to have it available. Keep in mind, this company doesn't have sales reps. There's no one to give you advice. So it's a computer. I've also done a video on this if you want to watch me actually go through a quote with them. I'll link that up here, wherever the thing is. And they just recommend things. And there's a very big negative to that, where if they don't recommend it correctly or they give you too low of an insurance, you're done. You're just accepting whatever they said without having that advice. That's where this channel comes into play. I actually don't tell you not to quote with them. They're actually a pretty decent company, especially for renters insurance. They're crushing that part. If you're in need of that, watch the video to go over what coverages you should carry and learn from those pieces. That's what this channel is meant for. So a couple last things before I let you go. This is part, and we're gonna dive into my actual opinion on what I would do with them. There's actually a point to where I think that they're gonna be very successful. So their stock price as of today, the recording of this video, is $103.07. Earlier this year in January, they were $180 some odd dollars. So they've lost a pretty significant amount of investment. I actually think there's a really good spot here where you guys can capitalize if you're investing in this company. If you're just looking for insurance, great company to go with, but there's a lot to look at as far as like what company you're doing business with. They're really good at paying some claims. My fear, like I said before, is the coverage you get. This is a quote that actually was from August 21st of 2020. It was about 1 o'clock in the afternoon, and this was actually from I'll link the website below, but it was just a quote I pulled up. So there were a couple agencies and couple agents talking about this as an article. I think it was Insurance News or something like that. But they talked about the cost per customer, where the average policy is about $3,000 in premium, which it's actually lower than that, but that's fine. That's what this discussion was. And they were actually talking about the profit. So they were essentially, this person was saying 100% correct. The average agency premium for personal lines is probably about $3,000. Like I said, it's lower. A year per customer with the average longevity is maybe 5 years. So $150,000 premium long-term value. Lemonade has a retention rate of around 50%. Now, I don't know if that's correct or not, but I would guess that's probably close. Their average lifetime value of a customer is going to be maybe $300. Well, according to those numbers, it would be $1,500. So whoever wrote this is a little bit off. The customer acquisition cost per policy cannot support this. In my belief, investors are the relevant source of funds in this company, I can tell you. I'm glad my money is, and then they go on to be a little bit negative. So they're kind of right though. The cost per length of customer, because if it is about a 5-year span to have a customer, this is why USAA slowly grew their book over time, because they put in the right amount of data to charge the right premium so that they were always profitable every year. And when these large events happened, then they're not going to necessarily get damaged as big as a company like Lemonade. Now, Lemonade is new and they're just coming out swinging. That's essentially their big pieces. They're pushing through the market. If they break through and they do make it and everything works out in their favor for the next 5 years and it's amazing, they're going to become big. If Google doesn't take control, which is another video you guys need to watch, where I talk about how Google is actually working to become part of the insurance industry as well. Now we've got some major competition. So here's my total thoughts on the end of this. I apologize, this was a long video. I hope you guys liked it. Give it the thumbs up if you did. But I think that Lemonade is going to be a great buy as they get under that $100 mark. If they get close to their stock or their IPO being lower than $80, I'm in. Like I'm gonna take that gamble because I've seen them go to 180. I know once they release the auto, it's gonna be all hands on deck. People are gonna think it's the next thing since sliced bread. Everyone's gonna join them. Once that happens, I'm dumping out at that point, to be honest with you. I don't know if I'm not a pusher, so I think I could legally say that. I don't know. That's my strategy, is if I see it go below 80, I'll probably jump on board. And if it goes back to 180 or whatever the case is, maybe it'll go to 300. I don't know. At that point, I'm going to just keep putting stop losses to control my possible losses on that. And if they make it, then all the power to them. I'm on board, right? Once again, this was a little bit unique to my channel. I do want your guys' opinion. Let me know everything that you guys thought of what I said below. If you agree or disagree, 90% of this is actually quoted from the Motley website, which I'm gonna link below as well. So you guys can actually go read what I'm talking about there. Let me know what your thoughts are. Do you think they're gonna go below the $80 mark? And then if they do make it, what do you think that their IPO is gonna go to? Do you think they could hit the 230 and 250 range? It's a big push, but I think if they add that auto, they could triple their business size. So there's a high risk, high reward option there. The other part that I forgot to mention is they're getting some attention from a couple places. So one, Motley, that is a major website for IPOs. And two, they're getting attention with an investor who is Meet Kevin. If you're on YouTube and social media, he's become more of an investor guru or an investor type that opens the stocks and ends it every day. And he's kind of become a large player in this. And he's talked about staking Lemonade as well. So let me know in the comments below what your guys' thoughts and opinions are. If you absolutely hated what I say, go ahead and tell me off down there. I appreciate it. I know there's a lot of opinions when it comes to stocks, and this whole channel is kind of about just insurance in general. It caught my eye. I got stuck in this whole Lemonade insurance piece where I made one video on them based on insurance, and then everybody started wanting advice from me. Those are my opinions. That's what I think that Lemonade will become. All right, guys, I'm Mark with Think Insurance. I'll see you in the next one.